Hello traders, welcome to the Nexoel Trading Hub YouTube channel. We're going to be looking at the weekly Forex forecast for the coming week. If you're new to the channel and wish to be staying updated with our weekly Forex forecast, you can do well to subscribe to the YouTube channel and also join the free Telegram community where you can have access to chart analysis. So guys, let's quickly head to the chart so that we can actually look at our peers and what to anticipate for the coming week. So as always, guys, we do start our analysis from the dollar index. So this is actually the monthly time frame in the dollar index. What you can see is the past few months have just been within a range. And then we actually are looking out to see what to look out for, expect in the coming week. Actually, I made an information available in the free Telegram community where I told the subscribers that within the first week of the month of July, we should actually expect a bearish move to the downside. And then you can see this is the month of July. You can see the first week actually gave us that bearish movement to the downside. So we can see that the expectation is to see that price possibly return to this level of this particular monthly week. That's the 25% or the 50% level. This is what we can see is actually the month of June actually rated the low of the month of May. So we have the rate of sell side liquidity. So we are expecting to see price come raid the buy side liquidity. So we can just see that price is just in a range, price reacting within this inversion fair value gap here in the monthly time frame. You can see we have the fair value gap, we have this momentum movement to the downside, and then price return mitigated, give the bearish movement, but then price broke through the fair value gap, and that makes the bearish fair value gap becomes an inversion fair value gap, where we can see a bullish movement having it supporting it as a support zone to possibly see the push of price to the upside. So you can see we're in a range because price is reacting at this or that block, and then price is reacting at the inversion fair value gap. So we can see that this candle closed above the fair value gap, facing rejection at the order block. So also the month of May gave us the down momentum. But then we can see price closed above the consequent encroachment of the inversion fair value gap in the monthly time frame. The month of June swept the month of May low. So we are in July, possibly expecting to see that price take out this buy side liquidity, since we have a sell side liquidity rate resting here. And then we can also see fair value gap here, price imbalance here. We have this gap in market, price filled it up, but we have this fair value gap resting above. So our expectation now based on the monthly time frame is to possibly see that the dollar index gives a bearish movement to the downside to come mitigate the 25% of this monthly candle week or the 50% of the monthly candle week. And then we possibly see that bullish momentum to the upside to come raid the buy side liquidity. So we could see further bearish movement to the downside before we would see July gives the bullish momentum to the upside to come raid the buy side liquidity. This is based from the monthly time frame. So let's actually head to the weekly time frame to look at what price is actually delivering. So here we are in the weekly time frame. Now, if you've been following the weekly Forex forecast, you would understand that we actually saw this implied fair value gap, and our expectation was to see actually price give us this movement to the upside. When we actually saw this breakout block, because this is the buy move that sponsored the sell move that took out the sell side liquidity. So we expected actually the mitigation, price to return mitigates that particular breakout block, and then we see price push to the upside, face reaction at the weekly implied fair value gap, but then break through it and then finds this implied fair value gap as a support for further push of price to the upside to rate the buy side liquidity. But then you can see we have this indecision candle, and then we have price falling to the downside. Now you can see that price is returning to actually mitigate this weekly candles week. So actually the first week of the month of July gave us the bearish movement to the downside, and then we can see that mitigation. But then we're further expecting to see that price return to the 50% of this weekly candle week, or the 25% of the monthly zone we marked out in the monthly time frame. I wouldn't really expect to see price return to the 50% of the monthly zone or level we actually marked out. Either price faced rejection at the 50% of this weekly candle week or the 25% of the monthly, and then we could see price possibly push to the upside to come raid the buy side liquidity. But then what we can see actually, just the way I've stressed, the market is actually just ranging if you actually look at it from the monthly time frame. That is what we can also possibly see here. So I would just see you actually look out for this setup and then drop to far more lower time frame to actually check market structure before you actually execute your trade, because we could possibly see price just push further to the downside. But let's keep these levels in mind, these price levels. You can actually see the price levels here. So keep the price levels in view and then see what structure will deliver in the lower time frame before you could consider the possibility of a bullish ride to the upside. So let's actually drop to the daily time frame. So here we are in the daily time frame. So what we can see in the daily time frame is actually the weekly implied fair value gap, and then in the daily time frame we have this inversion fair value gap. So I believe these two confluences give the possibility of this fall of price, made the fall of price possible in this level to the downside. So you can see this is that 50% of the weekly candle we marked out the week of that candle, and here's the 25% of the monthly. So these are the levels we still want to see for the push of price to the downside this coming week before we could see the possibility of any push to the upside. So we want to see that price gives us more down movement to the downside. Now you can see we have this demand zone here that's pushed price return mitigated. So we could just see reaction at these levels before we could see price possibly push to the upside to come raid the buy side liquidity. So let's actually drop to the 4-hour time frame. So here we are in the 4-hour time frame. This is actually that monthly inversion fair value gap. Let me do away with it. So here we are in the 4-hour time frame. What we can see in the 4-hour time frame is that we can see that price actually broke this bullish movement to the upside. See price broke through it, so we can see we should still expect further push of price. Price should possibly come sweep the low that price created on Friday, this low here, and then we see further fall for price to face mitigation at the 50% of the weekly candle week or the 25% of the monthly candle week. Then we could possibly see the rise of price to the upside. I think we can see actually here. We can also see actually here we have, this is the movement to the downside that took out the sell side liquidity. We're having a breakout block there. We can see we're having a breakout block. So we're having this breakout block because this is the last buying move before the sell move that took out the sell side liquidity. So we could see that possibility just the way I've already been seeing, that price may face reaction at this level and then gives us a bullish move to the upside. But then we shouldn't really target a far level for our take profit level. We can actually target this zone for the take profits if we actually see in the lower time frame that the market is giving us a bullish market structure for a form of reversal to the upside. So we should actually target to this level, to this fair value gap. Once we see price reaction here, that would determine if we are going to actually be bullish. So meaning if price should give us a structure, so if the market should give us this structure of price pulling to the upside, we want to see the reaction here. We could possibly see price would give us a form of range at this zone. Price may possibly range at this zone and then fall to the downside, or we could see price will break through it and then find supports, and then we see price will push to the upside. So we should actually just target this level to see what price is actually going to reveal to us before we could possibly anticipate for the ride of price to the upside. So let's drop to the 1 hour time frame to see. So this is the 1 hour time frame. You can also see the 4 hour fair value gap is also in confluence to this fair value gap in the 1 hour time frame. You could see that price was given a bullish momentum. Price had a change in character of the shift in market structure, and then price fell to the downside. Let's see if we can find any inversion fair value gap. So we can see price kept moving to the upside. We have this form of inversion fair value gap. Yeah, we have this inversion fair value gap. Let's look at that. So we have this inversion fair value gap. Price reacted, pushed to the upside. It is an inversion because price broke through it. Now you can also see it's in confluence to this level also of this fair value gap. So we should actually anticipate to see the reaction of price here. Before we can possibly see, we are anticipating to see the rate of the buy side liquidity. So this is what you should look out for in the dollar index. We are still going to be anticipating what? Bearish momentum to the downside. So guys, let's check out the GBPUSD pair. So guys, this is our GBPUSD pair. You can see from the monthly time frame, the overall market bias is actually bearish. So let's actually pay attention to most recent price action. Now we can see price is actually reacting at this fair value gap, this bearish fair value gap. And you can see this level is actually the consequent encroachment, the 50% of that fair value gap. Now what we can see is that price actually filled up the fair value gap and then closed below the consequent encroachment. So you can see price is just facing rejection at the consequent encroachment. So we actually realized that the dollar index gave us a bearish move in the first week of the month of July, and then you can see the GBP gave us what? A bullish market momentum to the upside. So what we are going to see is that the month of June took out the month of May high points. But there we can see that price is giving us a bullish momentum within the first week of July. Now, what we're going to see is price drop to the downside, and then we have this fair value gap. Price pulled back and then close above the fair value gap, and then we can see price return and then find support. So we have an inversion fair value gap in confluence to a fair value gap here. So we have the monthly inversion fair value gap within a monthly fair value gap, because we can see from this week high to this week low, we have a fair value gap. So just the way we are seeing arranging markets in the monthly time frame within the dollar index, we're also seeing the same in the GBPUSD. So price is ranging within the consequent encroachment of the bearish fair value gap and then within this bullish fair value gap, because we can see the reaction. Price fell to the downside. Now price is put into the upside, and now price gave us a sell side liquidity here. So this month, the month of June, rated the month of May buy side liquidity. So we could see price return to the downside to rate this sell side liquidity. Now what we're going to see is this is the 25% of the monthly week here. So price may not really return to the 25%. We could still see that price may react at the consequent encroachments before we have the fall of price to the downside to come read this relatively equal low points. So this is what we are just seeing within the monthly time frame in the GBP USD pair. So the market is not really clear. The market is not really giving us this kind of impulsive move that we wish to see. So let's drop to the weekly time frame. So here we are in the weekly time frame. So this is actually that 25% of the monthly time frame week. So what we're going to see is we just possibly are going to see price push to the upside. So the consequent encroachment to the 50% level of that monthly fair value gap. And then we could see that price would drop to the downside. So this is actually that monthly buy side liquidity rate and see. So price may just further push to the upside, and then we see the return of price to the downside to possibly come raid this sell side liquidity. Actually, if you've seen the previous weekly forecast, we actually expected price to fill up this fair value gap. We actually saw the movement of price to the downside. I wanted it to push further to fill up this fair value gap, but then we can see price did not completely fill up the fair value gap, and then price gave us this bullish move to the upside. So we could actually anticipate further bullish move before we can see the bearish move. So because price is going to create a form of fair value gap here before we could now see the possibility of price riding more bearish, or we could see bullish. So let's actually drop to the daily time frame for you to see more in regards to price. So here in the daily time frame, we can see this is actually our monthly rate of buy side liquidity. You can see in the daily time frame we have this bullish candle swept this high. So we have the rate of this buy side liquidity, this swing high. So this is actually the 50% of this bullish candle, so which is actually serving as a rejection block. So we want to see price gives us more bullish move to the upside to this level, or the consequent encroachment of the monthly fair value gap before we could see price fall to the downside. And when prices fall into the downside, our target will be at this breakout block level. So when price returns to this breakout block level, then we are going to determine if price is going to give us further bearish move to the downside, or we could see a reverse. So let's actually drop to the 4-hour time frame. So here in the 4-hour time frame, you can see that within that daily candle week, now we have a fair value gap here. So we still expect more bullish move then when the markets open to fill up this fair value gap. Price mitigates the 50% of the daily candle week, or the 50% of the monthly fair value gap. So you see price may not really push to this level, to the 25% of the monthly candle week that we actually marked out in the monthly time frame. So these are the levels we should keep in view. And then before we could see price gives us the bearish move. So this should be where we are targeting to actually see price reaction. So if price should drop to the downside, we could possibly face this range in levels here, and then price may push to the upside, or we could see price break through and then this react as resistance, and then we further see price fall to the downside to take out the sell side liquidity we marked out from the higher time frame. So this is what we should actually keep in mind for the GBPUSD pair. So let's actually check out the EURUSD pair. This is the EURUSD. We can also see in the EURUSD we're having a range also for the past few months. You can see this is the candles just closing within each other. Now we can see that this is the month of May. The month of June swept the high, took out the buy side liquidity. You can see that EURUSD has been giving us a bearish momentum, and then price reacting at this supply zone. Now what we are going to see when we look at the most recent price action is that we can see price reacting at this order block here, and then the rejection that came from the supply zone. Now we can see price here ranging between this order block and also this order block. So we can see price ranging here. But then the month of June swept the month of May buy side liquidity. So we're anticipating to see that price would return to the 25% of this candle week, or possibly the 50% of the candle week, and then we could possibly see the fall of price to the downside to come raid the buy side liquidity. Though we have this fair value gap resting here, so this is basically more of a long projection, but let's just pay attention to the most recent price action. So this is what we're going to anticipate, that we still see a bullish move to the upside come mitigate this candle week before we could see price fall to the downside to possibly raid the sell side liquidity or just the sell side liquidity of this candle. So guys, we can just see that the market is just ranging. So market has just been facing reaction between this other block and then this other block. So let's drop to the weekly time frame. So here in the weekly time frame, what we are going to see is that we have price here reacted at this gap in the market. You can see we have this gap. Price jumped from this close and then opened here. So we have this gap. Price filled up that gap. So let's look at the most recent price action within the weekly time frame. Now we can see that monthly buy side liquidity rate. Then we can see that this candle week is unmitigated. So we could see price return to actually mitigate the candle week, the 25% or possibly the 50% level, and then we would see price drop. So when price drop in the coming week, we want to actually see the reaction at the weekly inversion fair value gap before we could possibly project the possibility of price continuing to the downside to raid the monthly weekly sell side liquidity. So this is what we can also see from the weekly time frame. So let's drop to the daily time frame. So here is the daily time frame. Just as we actually witness rate of buy side liquidity, the same thing we can see also in the daily time frame in the EURUSD pair. So we can see that price took out this buy side liquidity. This is a swing high price projected to the upside, took out the buy side liquidity, and then we have price fall to the downside. Now what we can see is price created this pullback into this fair value gap, and then price continued to the downside. If you guys actually watch the previous forecast, I told you guys that we were expecting to see price sweep this sell side liquidity, but price did not, based on the daily time frame, before we could actually aim for the monthly weekly sell side liquidity. So guys, if you really want to really be staying updated with this weekly forecast and other further information, then you should do well to join the free Telegram community. The link is in the description section. And if you're new to the YouTube community, to the YouTube channel, you can do well to subscribe, like, and share our videos. So guys, let's head back to the chart. So we can see the price return into this fair value gap, but we do not have price filling it up completely. So we still have this fair value gap left here. So we could see the further push of price to the upside to come fill up the fair value gap, and then we can see this other block. So price could face rejection here, and now we are going to see price fall to the downside. So we want to see the price action that will form at this zone before we could further project price to the downside. So price could just fall from this level to the downside, could possibly see price just giving us range, then price could push to the upside, or we see price fall and then return, then go to raid the sell side liquidity. So first, our attention for where we want to actually take our profit should be at this level, which is actually the weekly inversion fair value gap. So let's drop to the 4-hour time frame. So here we are in the 4-hour time frame. We can also see that in the 4-hour time frame, what we have also, we have this inversion fair value gap in the 4-hour time frame that actually coincide with the other block we marked in the daily time frame. And also we can also see that the 25% of the monthly candle week is also resting there. And then you can also see the inversion fair value gap and then a fair value gap. Price face rejection pulled and then came and broke it, made this an inversion fair value gap. And then here we have the conventional fair value gap. So price should anticipate to push to the upside to this level. We could see price face some kind of range before returning. So our target should be to see what price action would be within this level. Because we can also see we have this fair value gap here because price fell to the downside. We have this break of this swing low. So we have also this fair value gap, which is going to form an inversion fair value gap because price returned to it, respected it, but then broke through it. So we should anticipate it to offer a form of support. Then if price breaks through it, then our target would be to see price sell to take out the sell side liquidity. But the first target should be this. When price should break this zone, we should be targeting this sell side liquidity first. So this is what I have to show you guys in the EURUSD. So let's check the gold pair and what to anticipate in the gold pair. Mind you guys, you must wait to see price action within the lower time frame before you take your entry. So guys, let's head to the gold pair. So this is actually the gold pair. The gold pair has actually been bullish. So any form of bearish movement we're going to take has to be with precaution. So this is actually the monthly time frame in the gold pair. We can see this momentum movement to the upside. But then we can see that price is kind of finding rejection. Yeah. Then we have this indecision candle in the month of June. Now we can see we have this fair value gap. If there is going to be any form of a bearish move, I'll be aiming for this fair value gap where I'll be anticipating to see price sweep this sell side liquidity or this sell side liquidity to mitigate the monthly fair value gap before we could see a continuation of a bullish momentum or price continues to the downside to this other block zone, because we also have this massive fair value gap left here. So gold is actually bullish. It has been bullish, so you just have to take the bearish movement with precaution. We now actually have the rate of this buy side liquidity. So since we have the rate of buy side liquidity, we should expect the rate of sell side liquidity. So, and expecting that, then we would want to see price possibly reach this level. This is actually the 50% of this entire monthly week, but within this range, and here is another 50% level, which could possibly see price return to this particular level before we could see a sharp fall to come raid the sell side liquidity and mitigate the monthly fair value gap. So let's actually drop to the weekly time frame. So you can see this is actually the 50% of the monthly week. Then you can see it within this other block zone. So we have a rejection zone here, rejection block zone here. So, and here we have that other 50% between this range to this range. So that other 50% where we are possibly anticipating to see price reaches before price gives us a bearish momentum. And then we want to see that bearish momentum first face reaction at this level before we could possibly see it dropping more further to the downside to raid the sell side liquidity. So just the way I've said, actually, you can also see from the weekly time frame that gold is extremely bullish. So we just have to take the sell side with precaution. But the reason to why we may consider the sell side is actually because we have this buy side liquidity raid. So we expect to possibly see price raid sell side liquidity. So this is what we can see in gold. So we should anticipate for the push of price to this level or the rejection block zone before we could see price gives us a bearish move. So guys, let's drop to the daily time frame. So this is actually the daily time frame. You can also see that 50% monthly week level, and then we can see the 50% between this level to this level also. So you can see we have this fair value gap. You can see we have this fair value gap. And then the rejection block we actually marked from the weekly time frame. We can also see here we have it as an order block. So we could actually see price face rejection and then drop off to the downside. So that is what we're going to see. So we're going to possibly anticipate to see that price drop, and then we look at this level here. or where we want to see a kind of reaction before we are going to further anticipate price to possibly drop more lower to come raid the sell side liquidity. So the first sell side liquidity we'll pay attention to is actually this sell side liquidity, one resting here and also here. Then we could now see price drop to the weekly fair value gap here, which is also the monthly fair value gap here. Then we can now expect to see maybe price would give a kind of further reaction before we see a push to the upside. So this is what I would just say about gold. To see rejection at this level, since we have the rejection block coinciding with this daily order block and we have a fair value gap, so we could possibly see that form of bearish move. We should target to see price reaction at this level to determine further bearish movement, or we could see price project to the upside. Let's go to the 4-hour time frame. So here we are in the 4-hour time frame. We can all see in all time frame, we can see that clean sweep of the buy side liquidity. So we can also see that there's a form of a support level here within the rejection block, which also in the daily we could see an order block. We also have a fair value gap in the 4-hour time frame, which also coincides with an inversion fair value gap here. So we could actually see that's rise in price and then price face rejection to return to this level. We have this demand block here. So we could see price sell. Then the action we see here will determine if we're going to further see price drop to rate this relatively equal lows here and then take out the weekly sell side liquidity. So this is what we are projecting to see in gold. So guys, let's check out other pair like the USDJPY and the USDCAD. This is our USDJPY here, and then we can see that price is just bullish in the USDJPY. So from the weekly time frame, we're actually expected to see price raid this buy side liquidity. This is the monthly time frame. So because in the weekly time frame, we're going to see that there was a raid of sell side liquidity. So we anticipated to see price project to the upside to take out the buy side liquidity, and then we can see the month of June actually closed above, took out this buy side liquidity. So I'm expecting to see price return to the 25% of this candle, but since what we are seeing is that price left this imbalance. Don't see price return to this price level, which is actually the 159.996 price level, before we are going to further see a bullish momentum to the upside. Because when you look at the yen index is actually bearish. So let's drop to the weekly time frame. So here in the weekly time frame, we can see that buy side liquidity, we are waiting for price to come raid, because you can see this candle took out this sell side liquidity. So we anticipated the push of price to the upside to raid the buy side liquidity, and you can see price successfully raided the buy side liquidity. We want to see the return of price to mitigate this level before we could see further push of price to the upside, or price may further dip a little to mitigate this weekly week before we see the rise of price. But I'll be more interested at this level, because when we drop to the daily time frame, in the daily time frame, you can see we have this fair value gap resting here, and then we have this demand level. The demand level may not really be a clean demand level, but let's see what price would do. Price took out buy side liquidity, price returning to fill in balance, and we could see price push bullish to the upside based on the daily time frame also. So I'll be looking at this zone to see if we're going to actually have a firmer reaction within the lower time frame that we consider price pushing to the upside, since also we have the fair value gap. So this is what we have to see in the USDJPY. Let's check out the 4-hour time frame. So this is a 4-hour time frame of the USDJPY. It's like we have a rally, base, rally, then we have this relatively equal low points here. So this can be treated as pool of liquidity. So let's see what price does when price return into the zone. So in our lower time frame, we refine that. Look out for structure, consider the bullish momentum to the upside. Let's actually pull out a trend line to see. So where we have our trend line, this is what we are having when we have a trend line. So let's look out for what price action will reveal here. Let's look out for structure here with the lower time frame, like the 15 minutes, 5 minutes, and then we possibly project price to the upside. So this is all I have to show in the USDJPY, but we should expect more bearish move to the downside to this zone. Let's check that in the 1-hour time frame. Yes, so we should expect more bearish momentum to the downside because we can see in the 1-hour time frame we're having structure to the downside. When we also pull out the trend line, we can see we're having structure to the downside. So we should expect price to pull further to the downside before we can possibly expect bullish move to the upside. So this is all I have to show you guys about the USDJPY. So let's check out USD Canadian dollar. I don't really know what is wrong with all USD pairs. We can see this is actually in a range. This has been in a range for quite some while right now. So what we're going to see from the weekly time frame is that we have the buy side liquidity rate. We have this full buy price give us the swing high. So we have this candle took out this candle's high, and then we have the drop off to the downside. So what we're going to see is that we have price pull back and then price again drop to the downside. So we're actually having the rejection of price at this rejection block, and then we are having rejection at this order block. So we have this unmitigated week based on the weekly time frame. So we're anticipating to see that price will fall further to take out the sell side liquidity, and then we look out for buy entry from the lower time frame when we see price reaction at this zone based on the weekly time frame. So this is what we should look out for. So we have sweep of this previous week high points. So want to see price further push to the downside before we could see any form of reversal to the upside when price takes out this week low points here. So let's check out the daily time frame, where you can see that even the USDCAD is actually in a very choppy markets condition. So here in the daily time frame, so we can see that level where we have the buy side liquidity rate, the sweep of liquidity based on the weekly time frame. And so we have this order block there. And then price is just reacting at that order block. And then you can also see within the daily, price is just reacting at this order block, filling up this fair value gap. So we are seeing this reaction of price, and then price went to the upside, price dropped down, reacted at this order block too. And now you can see at slightly even below the open of this candle, price dropped. Now we can see price return to mitigate this week, so the 50% of the week, and then you can see price closed above the 50% of this week. So we could still see the further push of price to the upside because this level actually served as a form of support. Let's actually project that outward. So you can see it actually served as a support level. Price has just been ranging. So we possibly want to see breakouts, take out this sell side liquidity, which we marked out from the weekly time frame. So we want to see price drop to this demand zone, this order block zone, this indecisive candle, and then price should drop to it before we could see price pull to the upside. So we can see price give us this fair value gap, and then price reacted to the fair value gap. So the coming week, we should possibly anticipate to see that USDCAD drop to this level before we can consider a bullish market condition. Let's check out the 4-hour time frame. So, okay, here in the 4-hour time frame, you can see that level was just serving as a support level. You can see it's actually a fair value gap zone. You can see price was reacting at it several times. Price reacted. So now we can see price return into that level. Now we can see price is actually at this bearish fair value gap, which is serving as a supply zone based on the 4-hour time frame. So want to see this level pushes price to the downside to raid the weekly sell side liquidity. So based on lower time frame, you can look out for buy entry at this zone. Let's check the 1 hour. So it's all similar all across. You can see a level serve as supports. So we want to see price possibly sweep this high points here. We want to see price sweep this high points, face rejection at the consequent encroachments, and then we see push of price to the downside, and then we can determine a bullish market condition after the sweep of the sell side liquidity, and then we can ride to the upside. So this is all I have to show us this week based on the peers we've actually analyzed. So guys, if you're new to this YouTube channel, really want to stay updated with our coming content, you can do well to subscribe to this channel and also join the free Telegram community where we share a lot of information as regards to trading the financial markets. Sorry, I'm seeing something. Let me see what happens here. Okay. All right. Nothing really to say much about, but what can we see? Price broke this trend line, return, retest. Price is going. So we should actually still expect more push to the downside. So let's expect push to the downside to sweep the sell side before we could see a buy move. So that's all, guys. Cheers, guys, and God bless you all.